Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Hey, Friday. What's up, everybody? Hope you're having an amazing day. Welcome to our daily market commentary. I feel like today is just about a national holiday. It is a national holiday because it's Avengers Endgame Day, and everybody I know is talking about it, but I haven't got a chance to see it yet. I'm not going to have time to go see it, and so don't ruin it. No spoilers. I'm just kidding. All right, everybody. Hope you're having an amazing day. We do what we do every day. We take a look at the markets from an educational perspective, looking for potential breakouts and reversal trades. So let's go ahead and dive right in. So taking a look at the S&P this morning, we are down just a smidge from yesterday's close. Now, we did come all the way down yesterday to our reversal long area and then got a really nice little pop up out of that range. A nice little rally up out of that little level at 29.14, 29, that little level there, getting down as low as 29.14 quarter. Which is where we had our little line here. So if you're able to catch that one, you got a really nice reversal trade off of there. Worked for about a 2-to-1. Level's still valid. However, I need to switch it now to a confirmation style entry. Confirmation style entry gives me a little bit less exposure on that position kind of as the trade comes into there next. On a Friday, there's a chance we could make it down to there. That's about 9 points from where we are today. We could certainly see another reversal at that level. In the Nasdaq, I will tell you, I did anticipate a little bit of a potential gap and go trade yesterday. In our live trade room, I thought we could have a little bit of a gap and go. However, we started to sell off in the early part of the morning, which set up then for a really nice shorting opportunity for those of you that were able to take it. We were also looking at a shorting opportunity on a breakdown yesterday in the S&P if we got below one of these levels. So some people were able to make this trade all the way down and then take the long back up. In the Nasdaq, we had said, shorting may not be the best route. It's not a good shorting opportunity. Looking at it on the 4-hour chart, we've actually given ourselves a little bit of a lower low. So it's a fairly nice little pullback that we have. And I like little pullbacks that are going to, pull us back into a decent level of demand, a decent area to buy again. We're actually showing a little bit of a move up in the overnight hours, but not so much that it doesn't look like we can't get another rollover. So if you're so inclined, I think there's a chance to actually ride a little bit of momentum to the downside for a small move below this 77.95 region. This 77.95 area could give you a little bit of a run down. Next, crude oil. Oh boy, crude oil changed directions on us. And this is pretty much what happens. When you follow trends and you trade the trend side, we knew we were at a slowing momentum piece. And then we got a little bit of a pullback. And when you do it that way, what happens is you're going to have a few trades that wind up going against you in that ilk. And one of them would be yesterday. I was just looking for a quick potential trade right off of this level as we were when we were in the live trade room. A little bit of a quick trade off of this level, knowing that it had already been hit once. And we came down through there. Now, we then came here on the 15-minute chart. Now, remember, we know that this level was found on the 15-minute chart because it's a purple line. So on a 15-minute chart, that level comes into play. But look at what we had before the level, right? So this area here of basing before the level is the kiss of death, right? Kiss of death is an area of basing before the level because the area of basing below the level, one of the things that we do at TradersArmy.com is that we have a top performing trade score. We score every trade using our top performing trade score, and that score gives us a probability analysis of the level, and basing before the level usually invalidates trades because it invalidates it on two fronts: reward to risk ratio and the angle at which price arrives to the level. We actually want to measure the angle at which it arrives to see what does it look like? And this is really what happens here, right? We get basing in front of that area. Now that basing meant that when price came into here, we didn't get a strong reaction. Now, even if you did get into the trade and you said, the basing doesn't bother me, you still shouldn't lose much money in this position because price comes into here and we use our 6 candle rule. 1, 2, 3, 4, 5. After 6 candles, price hasn't moved. It's time to either close the position or move the stop to break even. And so by following the rules, there's no reason why you should have taken really much of a loss on this position. Now, then what that does is once we created that new lower, that new low here, and now we've got a new lower high, that makes this level here a little bit weaker. And so now I'm looking for shorts. So now I'm looking for potential short opportunities as price is beginning a little bit more of a move. Now, we've not come below our little demand level that we had here, and that demand level is still holding. But I'm going to look for shorts for the next little bit, and I'm going to start with this area way up here actually leads to a really nice potential short in the future. And if I go to a 15-minute chart, I can come all the way and just use this one. This level here works pretty well. You could be short right now, and I'd totally be okay with it, right? This level here is actually not a bad area. If indeed we can make it back up into this region. I'm not sure that we will, and because it's the top, it's kind of in the middle of that area, I would let that be, and I will shrink that level down. Oops. Meant to just grab this. There we go. To just this pivot up here. So that's what I'm looking at now on the 1-hour chart. I've got now 2 levels of supply up above me where we may see a bit of a reversal. So keep an eye on those for crude. Gold, we have hit our entry in gold. This is another one where we've got a fair price value area right here just in front of the level. So if you've entered this position, I would take your stop and move it to break even because we've already hit our opposing fair price value area. You may not have entered this position because we came so close to it yesterday. I know that my alert got triggered, and then it may have you may have converted it to a confirmation style entry. So I'm gonna convert this to a confirmation style entry here as well. If you didn't get in, I think there's still another chance for it, but it's not as strong now since we've come close to it once, and we did a touch and go. So you could move your stop to break even, allowing price to keep going down if you did get in. And if you didn't get in, I don't know that I would chase it. Okay, let's look next at bonds and our currency markets heading into a Friday. So in our bonds, we have not seen much movement from this. We had our breakout, which was a really nice breakout trade, and then not much movement since. So there's really nothing I want to add on the bonds today. Inside the Aussie, we had a little 15-minute level up here. And going back to our 15-minute charts, remembering our 6 candle rule, right? Price comes into the level, 1, 2, 3, 4, 5, 6. Essentially, it was enough to show me that the level wasn't working, right? And that's why we use the 6 candle rule. Essentially, you shouldn't even have taken a stop out. That's about a break even stop. Same thing here on the euro. Price comes up. We get a little bit of movement away, and price hasn't really done a whole lot since there. So there's no reason to still be in this trade. Now, if you are still in the trade, your stop should be at break even at the worst. I'm not saying close out of a trade after 6 candles, but if it hasn't started moving your direction, then at the very least, move that stop to break even. Okay, now same thing here in the Canadian dollar. Price came in 1, 2, 3, 4, 5, 6. You still didn't hit the full stop out. You still take a small loss, but not enough to really worry about. So now all of these were currency trades, and certainly what we talked about in the live trade room yesterday is there's no reason to take all 3. Right? Essentially, all 3 of those levels, the euro, the Aussie, the Canadian, and frankly, if I go to the pound, were levels found at the same time. All of them were essentially trades on the U.S. dollar, right? as the US dollar, as price was coming back up into that US dollar level. And then we got basically the same thing in the pound. So all of those trades, you know, the euro worked out probably the best. The pound did okay. The Canadian dollar and the Aussie, but they all gave you the 6-candle rule to allow you to exit the position for minimal to no loss. Okay, and that's really the benefit there. Now, when I look at the pound on a 4-hour, we're definitely in a downward trend. However, if you're more aggressive and want to give it a try this morning, I think you may get a little breakout above this region here. It's putting in a little bit of a basing pattern. And if we can get above this area here, we're getting basing below the line, you may get a little run up heading into the weekend. And then in the Japanese yen, I felt pretty good about this level. Unfortunately, this is just a pure stop out, right? Which is what I like. If I'm going to get stopped out, I want to get stopped out quickly. When I'm wrong, I want to be wrong quickly. And price came up and stopped us out. So that would be our only pure, totally 100% wrong trade of all those currency positions. All the rest of them, you know, they just didn't react as well as we would like. So we're heading into a weekend. So remember this on weekends. Over the weekend, futures have an ability to gap. So you're going to want to protect yourself and protect your positions by moving those stops into areas that you're comfortable with before the close if you want to get out. And if you do want to hold over a weekend and you're concerned with gap risk, then take a look at options on futures. Options on futures are a way that you can hedge some of those positions. And for those of you that don't trade options, learn a bit more. If you go to tradersarmy.com, underneath trading courses, we have an area for free under free trading videos. And underneath the area that says free trading videos, you will see that we have an entire video dedicated to options on futures. So underneath free trading videos, there's a number of videos here, and it's combining options with futures. So that combining options with futures video is one that a lot of people have given us great feedback on what they can learn from how to use options on futures in order to protect their positions, but then also maybe they want to just take the futures trade, the options trade in lieu of the futures trade. This was done on our last educational webinar that we put out there on the worldwide interwebs, and then we recorded it and turned it into a class on tradersarmy.com. If you have an interest in learning a bit more about that, feel free to go check us out at tradersarmy.com, and we're going to actually have another live webinar here coming up in the next few weeks. Our topic is going to be counter trend trading and the slowing of momentum, so we'll cover that in a few weeks. So I hope you guys have an amazing day.